Hello and welcome to Morningstar. I'm Emma Wall, and joining me today to give his 3 stock picks is Richard Buxton, manager of the Merian UK Alpha Fund. Hi, Richard.
Hi.
So what's the first stock today?
Well, all 3 of my stocks today are UK domestically focused companies, which in the light of Brexit uncertainty is interesting. So the first is Tesco, where new-ish chief executive, Dave Lewis, has been in there 4 years now. He always signalled it was going to be a 5-year turnaround plan. I think that he's absolutely not put a foot wrong. Everything is moving in the right direction in terms of he's got his pricing back and competitive. He's got consumers' trust back. He's introduced new lines, and I think there's still all the benefits of the acquisition of Booker still to come through. I met him again recently, and what was very encouraging, he's already talking about what he can do for the next 5 years in terms of beginning to really drive the business forward. So the balance sheet is strengthening day by day, so I think there's a potential for it to become a really significant dividend payer over the course of the coming years.
And it's quite interesting what you say there. You know, over the last 5 years, Tesco has had some significant challenges with the accounting concerns and also with the just sectorised structural stuff with the Lidl and Aldi. What does the next 5 years entail now that those sort of things are slightly put to bed?
Well, I think, yes, certainly the industry itself is getting more sensible. I mean, even the German discounters are slowing some of their expansion plans, reflecting the fact that we are essentially a mature economy. There is not that much growth to be had out of food retail. Clearly, a big influence will be whether the Sainsbury's-Asda merger is allowed or not, in what shape or form. But if that is allowed to happen in whatever form, if some of the stores that they are required to sell are picked up by Morrison's, Aldi, Lidl, then again it'll become a much more sort of orderly market where they won't be constantly throwing down new space and trying to knock spots off each other. It'll be a much more sort of sensible market. It'll still be incredibly competitive, don't get me wrong, but I just think that you won't have the persistency of the space race, which was really a problem for the sector for many years.
And what's the second stock today?
The second stock today is Whitbread, which clearly, having sold Costa Coffee to Coca-Cola for a very substantial price, is now purely focused on hotels. It's the owner of Premier Inn, Britain's leading budget hotel brand. There's still lots of optionality for that business in terms of growth here in the UK, but they've also started putting a toehold into the German market. The German market has lots of long-term opportunity for them. It's a very fragmented market, lots of mom-and-pop operators, but a very budget-orientated market as well. So I think the scope for them over the next 5 years to really begin to roll out Premier Inn in Germany gives this a fabulous longevity.
And what's the third stock pick?
The third stock is an old favourite of mine. It's Lloyds Bank. At the moment, it is sort of going up and down on Brexit news and perceptions. But I think, again, get beyond Brexit, then actually the earnings power of this bank is in no way reflected in the valuation. It's a hugely capital generative bank now. The opportunity, therefore, for it to continue to both buy back shares and offer very significant dividend growth, I don't think is reflected in a valuation that still trades at a modest discount to book value.
And do you you hinted there, do you expect the dividend will be raised over coming years? Because Lloyds used to be a stalwart of any income portfolio,
Absolutely.
But then it absolutely fell from favour.
Yes, of course. No, I think it very much will be able to crank out dividends. I mean, with the shares trading where they are today, I can understand why they're diverting some of the money to buying back stock. But I think in the fullness of time, this is a bank that could be generating dividends of, 5 pence a share, perhaps, which, on today's 56p share price, it's pretty compelling.
Richard, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.